Hey folks, TGIF, it's Dan Frio here. The rate update today is September 24th, 2021. I'm going to explain to you guys what the Fed is talking about in general when they had their meeting the other day. And one of the things we want to focus in on is the dot plot. I bet you're a little bit confused on what that means and why the Fed even uses it. So when you come back, we're going to go over that and more. So don't go away. Okay, so my goal on the channel is to educate you and inform you with the facts behind everything. So what we want to talk about right now is mortgage rates. That's the name of the channel, the rate update. So we focus on mortgage rates and the housing economy, the real estate markets, and so forth. In the upcoming episodes, we're going to try at least once a month to get several realtors all over the country and do videos with them to let us know how properties are going in Boston, how's the market looking in Atlanta, how's everything going in Florida? How about California and Texas? So if you're a realtor out there, you want to partner with us to do some advertising and do some referral exchanges, love to hear from you, and I'll give you the information at the end of the video. So what we're going to talk about today is every day I go over what's going on with the mortgage-backed securities market. So watch this video. It explains mortgage-backed securities briefly, and then when you come back, I want to go over the next piece of this component when the Federal Reserve talks about the dot plot and where they're seeing mortgage rates and interest rates going. So we're going to go over that next after this video, so don't go away.
Tony owns a small bank, and Alice wants to buy a home but can't afford to pay for it up front, so she heads over to Tony's bank to get a mortgage. Tony analyzes her financial situation carefully, knowing that if he gives Alice the loan, a very long-term relationship will be established, which revolves around Alice making payments to Tony's bank over a period of many years. This is what we could call a traditional banking relationship, and as can be seen, Tony has all of the reasons in the world to think twice before lending Alice money. Nowadays, we also have Bill, who is a modern-day banker, and Dave, who wants to buy a home and needs a mortgage just like Alice. As far as Dave is concerned, the process is similar, with him heading over to Bill's bank and asking for a loan. Unlike the previous banker, Tony, however, Bill isn't as worried about the relationship with Dave and is willing to ignore many of his problems. Why? Well, unlike Tony, Bill doesn't have as much skin in the game because 1. He gives Dave the loan. 2. He then sells Dave's loan to an investment bank and receives a bunch of money. 3. The investment bank takes Dave's loan as well as several other loans and creates a package called mortgage-backed security, or MBS. And 4. The investment bank then sells the mortgage-backed security to investors and receives a bunch of money. In the end, it's those investors who end up taking on risk and being rewarded if people keep paying their mortgages.
So what I'm trying to do is give you guys the understanding of the mortgage market, how mortgage interest rates are calculated, what's monitored, and so forth. So the Federal Reserve is basically the focal point of everything, okay? They don't control mortgage rates. They don't. They have nothing to do directly with mortgage rates. What they do affect or control is the federal funds rate. So let's dig in that for a second, and then we're going to go over where the MBS market is going in relation to all this news. So the first thing I want to show you guys is basically the Federal Reserve's dot plot explained and what it says about interest rates. Okay, so what happens is every Federal Reserve meeting, there's a group of Federal Reserve members that have voting rights. Okay, not every person on the Federal Reserve has voting rights. Out of 18 members, 12 of them have voting rights, and it alters periodically depending on the part of the country that the person sits. So for example, right now, let's say there's a person or the federal chairman, not the federal chairman, a board member sits on the New York Federal Reserve Board. They might have voting rights this term, but then in the next term or the next quarter or the next meeting, they might not have voting rights. So 12 of the 18 members have voting rights on what they're wanting to do or where they project the federal funds rate to go. And they plot it out on a dot plot. They basically say this, and here's actually their dot plot. You can see that all the members in 2021 said we are not going to do anything with the federal funds rate, okay? They're now saying, well, in 2022, some of them are looking to go from here, which we're at a 0.25, up to maybe 0.5 or right under that. You can see that starts going there. And then some, actually 3 of them, say we're probably going to be over the 0.5% or 50 basis points. We're maybe looking at 60, 75 or so forth. So this is where every dot represents one of the votes. And then they go out in 2023 and they start plotting where they think the federal funds rate will be. Okay, so when it says the Federal Reserve is planning on having 4 rate increases over the next year or 2 or 3, what they're voting on, or what they're talking about, is the federal funds rate, not mortgage rates, not the prime rate, anything, just the federal funds rate. Okay, so it has no relevancy directly to mortgage rates. But you can see out in 2023, there are 1, 2, 3, 4 people that think it's going to go raise at least one time, because our bench line is right here. All right. And then 3 think it's going to go up even more. Then 1 thinks it's going to go up even more. Then these think it's going to go over 1. These think it's going to go over 1.5. So you can see how that is. But you can see over time, basically everybody within 2024 are saying, we're not going to be here anymore. We're going to be, at least the consensus is right through here, is right here, between 1 and 1.5. We're at a quarter right now. Okay, so that means the federal funds rate is going to increase, in their thinking, at least 1.5%, 1.25% within the next couple years. Okay, so that is basically the dot plot. All right. Probably the best way to explain this is to let Yahoo Finance explain this for you in their words.
Well, if you've been following our Fed coverage here on Yahoo Finance, and we hope you have, you've probably heard a lot of references to the dots. After the Fed meeting on Wednesday, we know the dots are moving closer, but what exactly do those dots represent? And what does the Fed dot plot show? For that, we turn it over to Professor Brian Chang for this week's lesson in Yahoo U. Brian.
Well, Kiko, class is in session, and everyone is talking, like you mentioned, about those dots that we got from the Federal Reserve earlier this week. But it's a bunch of grown adults right now and trillions of dollars freaking out about some dots. But they do tell us something really important. It could show us a projection for where the Federal Reserve may take interest rates in the future. But there's also good reason not to hold the dots up as canon. But first, let's take a look at the dots that we got from this week. Again, these come out quarterly, and what you're looking at right now is where the 18 members of the Fed's policy setting committee see interest rates going over the next few years, and then also over the longer run, but let's kind of ignore that for right now. So people saw rate hikes coming in 2022 or 2023 possibly. So you can kind of see right here, I'm going to try to draw this. Well, actually, that line came out kind of nice. But basically, it's showing where interest rates could go in the future. 7 of the 18 members in 2022 seeing a possibility for a rate hike. And then in 2023, 13 of the 18 members seeing a rate hike. But people tend to look at the median member of that 18-member committee for where interest rates could be going. So if you look at the median dot for 2022, that's about this guy right here, which would show no interest rates, right? It's still pinned at near 0. But if you look at the median dot for 2023, it's about that one, which shows 2 interest rate hikes over that period of time. And this is the dot that got people freaked out. The last time we got this projection, which was in March of this year, the median dot was showing no rate hikes through 2023.
So now let's tie all this in together. So hopefully you found out from these 2 videos that, what the dot plot is and how important the MBS market is. So here's why we didn't freak out. Well, yesterday I thought the market was going to crumble. I didn't think it was going to crumble that much, but I did say, hold on, guys. The markets always overreact. So where are we right now with the MBS market on a Friday? Well, this might look here. Let me scroll down. If I just showed you this part of it, you'd be like, oh my goodness, it's still crashing. But if we scroll up, look, guys, I think we hit a short-term bottom. Okay, we're up 5. Okay, 5 basis points. What does that mean? Well, basically, we focus on this number right here because this is what's happening to the price of the bond. You have to know that piece of the puzzle, because if you looked at this and said, oh, this is the rate or what's going on with the yield on this mortgage-backed security, you'd be like, oh man, it's up 5 basis points. Well, no, this is the price. And why I say that is because the variance between this is inverted, okay? Meaning when the price goes up, like we saw here, rates go down, okay? That's the price of this mortgage-backed security bond goes up, yields, your mortgage rate goes down. So that is very important when you're looking at these charts, okay? So let's go and dissect this a little bit. This is basically a huge move. It was 70 basis points yesterday that we lost. Look at that in variation to this. This was the last time that we kind of got wind of the Fed's going to taper, the Fed's going to do this, the Fed's going to do that, inflation is out of control, and we collapsed, okay? But if you look at this variance here compared to here, this one was still bigger. But then what happened? The markets kind of stabilized, grasped all the data, looked at the numbers, everything else, and said, okay, and it started to stabilize. Okay, I've been a proponent, and I've been a proponent for months now, saying, and I have no problem saying this, rates are too low. Okay, the Fed needs to step in and start doing some things because it is affecting the markets. I shouldn't be saying that because I'm a mortgage person, but I give you the truth. You know, I would say, is Bitcoin overpriced? Maybe. Is the stock market overpriced? Maybe. I'm not a stock advisor. I'm not a Bitcoin advisor. But in this market, I'm saying the markets seem to always overreact. So yesterday I posted and said, you know, we'll probably start seeing a little reprieve, and don't be surprised if we get up to about this range by Monday, possibly. Well, we're getting there. We're a little the ways there, but we still have some ground to make up. What's happening intraday? Because this is a key point. Look, we came out of the market. Everything crashed. Everybody sold, and then look what happened since then. Green candlestick, green, 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 green all the way up. That means there's more buyers than sellers in the market. That's a good signal, and there's a lot of them. You know, this was bad. I think this actually consolidated a lot of stuff in that range, and then we came into the market and it was up from there. So other key points that we follow here is the news. Okay, we follow the mortgage-backed securities market like if you're following a stock. If you're following a stock, you're normally focusing on what's happening with that stock. Is the earnings report coming out? What's going on in the markets? What's going on with that company that's affecting these things? Well, what we monitor here to figure out what the direction of this is what's going on with the economic calendar. Because these are the things that we know are coming, but we also can't control those things that we don't know are coming. The COVID, unrest in the world, all these other things we can't control. So we try to take this data, absorb it, plus the data that we know is coming out next week, anticipate what we think is going on with that based on trends and everything else to give an educated idea on where rates are trending. Like this morning, new home sales came out and they were actually higher than expected. Okay, that's great news. But, you know, this is basically what I wanted to explain here is the Federal Reserve kind of in general. You know, they control the federal funds rate. They do this dot plot thing to kind of just let those Fed watchers kind of figure out kind of what's in their mind, but they don't control mortgage rates. How they're doing that is they're buying mortgage-backed securities in the tune of $4 billion a month, and they're trying to stabilize the price. When they talk tapering, that means they're going to start pulling away from that $40 billion a month, $4 billion a month, and start eliminating that. Maybe they'll go to 3 or 2 or 1. And they're saying, though, that by the summer of next year, by mid next year, tapering it'll be back to 0. Okay. So now it's going to be the markets are going to have to absorb all these mortgage-backed securities hitting the market. That's the uncertainty we have right now. And that's what's causing mortgage rates to fluctuate dramatically because everybody's like, okay, what's going to happen once the Fed pulls out of this? So that's why we watch this every day for you guys to make sure you're locked in at the right rate. Okay, so to find out more about me and my team, please go to, I'm going to go over here, therateupdate.com. And there's a cool tool here. I don't know why not many people are using it. I get a couple of these links a day, but it's going to ask you, what is your preferred rate where you're looking at to refinance or maybe even buy a house. But if you'd like to reach out to us, hope you like my videos, you find educational purposes in them, is give us a call at 844-775-LOAN, or you can apply right here by clicking the Apply Now button, or what a lot of people are doing is they're scheduling an appointment for a one-on-one consultation with you. We can do it by Zoom, Skype, however you want to do it, and by phone, and going over any and all the questions that you have. Because if you're looking to refinance, does it make sense? If you're looking to buy a house, what's all the options that you have? Do you know there's over 2,000 down payment assistance programs out there? Can you qualify for any of them? Does your lender where you're going to have the ability to do those? We have a ton of our the tools in our arsenal to help you guys get into a house. So that's it for the weekend, or that's it for the week, guys. I hope you enjoy your weekend. God bless, and I'll see you back here on Monday. Bye-bye.